It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks heading for a third day of gains following a bullish Wall Street session. The gauge of Asian currencies touching the highest since January as the dollar weakens. Seven and I to urgently review a takeover bid from Canada's Circle K owner and what could be the biggest foreign buyout of a Japanese company. And President Biden set to headline the opening night of the Democratic Convention, formally handing the torch to Kamala Harris in the race for the White House. All right, modestly risk-on day across the Asia-Pacific this Tuesday. Let's get over to Avril Hong in Singapore. Avril.
Yeah, Paul, this is tracking what we saw on Wall Street, right? The longest winning streak this year on the S&P 500, getting a bit of that tailwind thanks to the optimism that we'll see Jay Powell opening the door to rate cuts come Friday at Jackson Hole. And indeed, among stocks, we're seeing the Japanese equities today. Those are the ones that are doing well, erasing the declines from Monday. We actually saw interesting moves in terms of the dollar weakness. That was really the story that was playing out, and the Asia currencies were gaining ground earlier in the session, but they've given up a lot of that now. Still, we're seeing the Bloomberg Asia Dollar Index roughly at a 7-month high if you take a look at this next chart, and I think it is still on track for its best month this year. Also highlighting what we got today from the Chinese banks on the loan prime rate. They left things unchanged, and this is amid pressure on bank margins. This is the first time that Chinese banks have published without MLF guidance. Of course, this is after the PBOC shifted the window from the middle of the month to August 26. So that's what we're tracking in terms of markets. Paul?
All right, thanks very much, Avril. Let's get a little bit more on markets now with our first guest, Dong Chen, Chief Asia Strategist, Head of Research at PicTech Wealth Management as well. Dong, thank you so much for joining us. I just want to start, if I can, with the big moment of the week that we're all waiting for. It is, of course, Jay Powell going to be speaking at Jackson Hole. And are we seeing again this disconnect? Markets anticipating easing pretty much every meeting for the rest of this year. The Fed, meanwhile, saying, well, look, it's going to be staying data dependent. Are we getting set up for a disappointment at the end of the week?
Well, I don't think we're going to see any disappointment. You know, the market obviously has, swing quite violently in terms of expectation for the Fed cut. But I think you look at the fundamentals, I think we're in a situation where the economy obviously is softening, and we think that a September rate cut is on the table, but we do not expect anything dramatic as much as like 50 bips of the first cut.
Dong, what do you see in terms of the dollar then? I mean, how much lower can it go? How much weakness are you expecting?
Actually, we think that the recent weakening in the dollar probably already pricing a lot of those rate cut expectations. And I think at this point, probably we see some range bound. But I think that broadly speaking, if the Fed start this rate cut cycle, and the dollar probably has a little bit more to go.
Let's talk about what we're seeing in China today. I mean, we had the banks leaving loan prime rates unchanged. This was expected. There's some pressure on their margins. What is your sense of the kind of easing we can get from the PBOC going into the end of the year, and how dependent is this going to be on what we see from the Federal Reserve?
Well, first of all, I think the last month we saw this surprise rate cut from the PBOC. So that's why, I mean, today they stay put, which is not a surprise. But you look at the Chinese economic fundamentals, I think there definitely is room for further monetary easing, including rate cut and also a cut in RRR. Because if you look at the real interest rates, as inflation in China is very, very low, and particularly look at the PPI is still negative territory. So we do think that there is further room for easing, and we're actually looking for further rate cut in the second half of this year. But having said that, I think the more importantly, at this point, probably the more important policy tool is on the fiscal front instead of monetary.
Of course, a lot of assets in China are very cheap at the moment, and obviously they are cheap for a reason. But is there anything that you'd selectively be investing in there right now?
Well, I think it's generally is difficult at this point for China. The reason is that even though the government is trying to, stimulate the economy, but I think the market is disappointed because a lot of these policy measures do not seem to address, the problems that the market focused on. For example, consumers, consumer sentiment remain very, very low, and income growth is very low, while the government continues to focus on supply side. So I think as long as the government does not, shift their focus and try to address the low inflation problem, and not to address the consumer problem, I think the market probably will stay fairly muted.
Is the story different for you, though, when you look across some of the other emerging markets in Asia? Because we've got the dollar spot index off about 2% in the past month. That narrative seems to be becoming embedded. Where are you looking at around emerging Asia at the moment?
In the rest of Asia, I think there are, of course, a lot of signs of improvement. As you just mentioned, that the Fed cut actually would be good news for Asia broadly, right? And we have seen that reflected in the rising, FX in the Asian countries. At this point, we're looking. We think we have reason to be more structurally positive on India, for example, at this point, and also, as long as the semiconductor cycle continue to run, and we should be positive on markets like Taiwan and Korea, even though Korea is at this point still a major laggard.
We have a couple of decisions due from central banks in Asia this week. Korea is one, as you alluded to. What is your sense of whether they're going to kind of lean into this dollar weakness and, kind of lean into the appreciation in their currencies?
Well, at this point, I think probably they will still take a wait-and-see mode, even though it's getting clearer that the Fed probably is going to cut in the near future. But I think they probably will wait until that happens. So, and for different central banks, they have many different idiosyncratic factors to consider. For example, in Korea, look at the housing prices continue to rise. Probably it's not a good sign in the very near term. And also for some other central banks like Thailand, you have to worry about the elevated household debt and so on. But broadly, as long as Fed start cutting, then this will open the door for a lot of Asian central banks to follow.
What about yen volatility? Is that something that Asian central banks need to keep a more close watch on?
Well, I think over the past 2 weeks, we have shown enough kind of volatility. As far as, we're monitoring, it seems that a lot of this carry trade probably has already been unwound. So I think, this kind of volatility probably will mitigate going forward, but we'll keep an eye on that. At this point, I think, if you just look at the Japanese equities, we think that as long as yen does not surge beyond 140, probably things will still be fine.
Yeah, to that point, that touches on the question of the day today. How high can the yen go without spooking risk? You just nominated 140 there. Could that mark potentially be lower? Our expectation actually is, the yen probably will continue to stay fairly weak. The reason is that if you look at the recent history, the yen has been pushed so low, actually far beyond what the rate differential actually indicated. But the recent strengthening in the yen actually has already put it back closer to fundamentals. So actually, we do not expect any further strengthening or major strengthening of yen going forward.
Dong, in terms of the sectors that you're watching into the end of the year, of course, we're keeping a close watch on whatever the U.S. election outcome is going to be. But do you think there are opportunities there?
Related to U.S. elections, so I think that this point is very hard to call. But I think actually it's more of a risk to the market, because at this point I think Trump still has a fair chance of winning, and if Trump steps in, then issues like tariffs probably will be a very obvious risk to a lot of exporters, particularly China. So that is something that we'll keep a very close eye on.
Dong, how about some of your other top conviction calls just before we leave you?
At this point, I think in Asia, ex-Japan, so as I just mentioned, India is one of our top pick. And more broadly in Asia, actually, we think actually Japanese equities, after the correction, actually show some pretty strong attractiveness. I mean, the valuation has been coming down, and also we think that we still believe fundamental changes are happening in this economy, and we think there are further benefit in investing in Japanese equities.
Dong, I think one of your top flags are how fiscal issues are going to figure in this election year. Where do you see yields? Because it looks like whoever wins neither has this inclination towards tackling the fiscal deficit in the U.S.
That's true, yes. We do expect fiscal deficit to be structurally higher going forward, which means that the U.S. Treasury yield probably will be structurally higher going forward. And so this means that, looking at from a global perspective, selecting the countries with fairly more, a sustainable fiscal situation probably will be one of the keys. But I think those issues probably won't show up in the market in the very near term, but probably in the years to come.
All right, Dong Chang of PicTech Wealth Management, thanks so much for joining us today. Still to come on Bloomberg Markets Asia, our exclusive interview with the Indian VC firm 314 Capital. We'll discuss opportunities and challenges in India's startup space with their CIO joining us later this hour. First, though, Circle K's Canadian owners seeking to buy 7-Eleven. That will be the biggest foreign takeover of a Japanese company. We'll discuss the impact of that next. And, of course, the Democratic National Convention is underway in Chicago. Here are some live pictures of what's going on. Saw a surprise appearance a little earlier from candidate Kamala Harris, and we'll be hearing from President Biden a little bit later on from Chicago.
Thank you all. We love Joe. God bless you, and thank you very much.
It's almost like a reverse takeover, right? So it's although the market cap of Couche-Tard is much higher, but I think anything above 7 trillion yen, the market cap right now is about 5.6, but anything above 7 trillion yen and the management would be under a lot of pressure, particularly by active investors that have invested in the company and have been pushing the company to restructure more quickly.
Asymmetric advisors Japan equity strategist Amir Anvarzadeh is discussing a potential takeover offer for 7-Eleven holders or owner 7&I Holdings. And 7&I shares giving back some of yesterday's gains after this news broke. If it happens, a takeover by Canadian convenience store retailer Couche-Tard would be the biggest ever foreign takeover of a Japanese company. For more, let's get to our chief North Asia correspondent, Stephen Engel. So, Steve, you profiled 7&I earlier this year. You also interviewed the CEO. So how significant is this so-called friendly offer from Couche-Tard?
Absolutely significant, of course. As you just mentioned, the size and scope, it would be the biggest foreign takeover of a Japanese firm, something that doesn't really happen. There's not much of a track record, some would say because of more of a protectionist nature in Japan. But also this would be the biggest foreign takeover by a Canadian company if this goes through. And that's a big if, obviously. It is a friendly, non-binding offer, according to Couche-Tard, which owns the rival Circle K brand of convenience stores, and it really comes down to valuation as well. We don't know the number that has been put forward, but prior to this offer, the valuation was about $31 billion US. The market value after yesterday's big 22 or 23% rise on the market is of about $38 billion, and we can bring up a full screen graphic and kind of show where Value Act Capital, which is the activist investor, which prior to that interview I had with Ryuichi Isaka earlier this year, the CEO of Seven & I, they tried to get essentially a board seat. They tried to get Seven & I to essentially restructure much quicker, unlock more shareholder value. You can see here the size of Seven & I, 85,000 convenience stores around the world, including 21,500 in Japan, compared to Couche-Tard, 16,700 convenience stores. Couche-Tard just has 1% market share in this space in Asia, whereas Seven & I has 31% market share in Asia Pacific. But there's that market value at just $38.5 billion market value for Seven & I compared to $58.5 billion for Couche-Tard. So again, that's where Value Act Capital, among other activist investors, are saying you're not unlocking the value. They were proposing that 7-Eleven brand, which is the gold in the company, really needs to be unlocked. You need to get rid of or spin off essentially the underperforming big department stores like Ito Yokodo. They already sold Sogo Seibu last year, but again, they've rebuffed the activist investors' overtures before. Will they be able to rebuff this offer, depending on how much it actually is? As we heard from that analyst just a few minutes ago, essentially we're waiting right now to hear as Seven & I has put out a statement late yesterday after this offer was revealed, saying a special committee of independent outside directors will make a prompt, careful, and comprehensive review of this proposal. Paul?
Steve, just jumping in here, certainly Seven & I under a lot of pressure to unlock value for shareholders. And as we wait to hear whether the price is right, in the meantime, what does this mean for Couche-Tard? I mean, it hasn't made any secret of its global M&A ambitions.
Absolutely. They're on the warpath, if you will. And Alain Bouchard, who is who's spearheading this for Couche-Tard, has made no bones about his, desire to get 7-Eleven in the fold. He'd more than double, essentially, the footprint in the United States with those stores there. Combined, they'd have more than 100,000 convenience stores around the world. He tried in 2005 to get 7-Eleven. He was quickly rebuffed. He moved on and tried to look at Carrefour. He was rebuffed there. He was able to buy about 2,200 convenience stores from Total Energies last year. But again, it looks as though he's coming back, circling back with the yen at these fairly weak levels, obviously at 146 to the US dollar. And also the market sentiment has picked up, obviously, in Japan. He's making another go of it.
All right, Chief North Asia correspondent Stephen Angle there. Let's get you back to live pictures from Chicago. Of course, it is day one of the Democratic National Convention there. We have heard from a who's who of Democratic Party royalty there. Right now on the stage, you see there Ashley Biden. Obviously, President Biden's daughter speaking there. Let's have a listen in.
I could be anything, and I could do anything. As a child, I would sit on the leather chair in his office doing my homework, and he would sit next to me doing his work, drafting the Violence Against Women Act. And he wasn't just a girl dad. I could see, and he wasn't just a girl dad, I could see that he valued and trusted women. How he listened to his mother, how he believed in his sister, and most of all, how he respected my mother's career. Dad was always there, doing everything he could to be a true partner to her. Dad, you always tell us, but we don't tell you enough, that you are the love. Thinking about you, about your dreams.
All right, so you are seeing live pictures there from the Democratic National Convention in Chicago. Speaking there, Ashley Biden, the daughter of President Joe Biden, who she will be introducing momentarily to address the convention. Now, for the latest on the US elections, let's get to Bloomberg's Vonnie Quinn in Washington. Vonnie, we are waiting, expecting to hear from President Biden within the next few minutes. Now, his advisors say this speech is definitely not his swan song. What is it, if that's the case?
Well, it's looking increasingly more like it might be a little bit of a swan song, Paul, as we see a cavalcade of speakers really pay tribute to Joe Biden. It's really just in the last hour become, something a little bit different. We had a raft of senators, Chris Coons from Biden's home state of Delaware, Raphael Warnock, we had Hillary Clinton, and all of them, one after another, basically thanked Joe Biden for his service and essentially for stepping down from the ticket so that Kamala Harris has a chance to beat Donald Trump and be the next president of the United States. So we will hear from Joe Biden what he wanted to do before all of this, although I imagine he'll have to stand through many minutes of a standing ovation from the 4,700 delegates that are in the DNC Centre, plus everybody else as well, is that his administration did some very important things during the last 4 years, including passing legislation on climate and also the infrastructure bill that his administration signed into law. Also, the idea of protecting democracy, which has been very dear and near to his heart his entire career, but especially the last 4 years, and especially after January 6th of last time round. So we will hear words to that effect. We'll hear the baton being passed to Kamala Harris, who, by the way, made a surprise appearance for just a couple of minutes earlier on. Just after 8 o'clock local time, she entered the DNC on stage and said some words to the audience and said she was looking forward to hearing from Joe Biden. After this, his wife, who appeared just before his daughter Ashley, will head with him to California for a few days of vacation, essentially to maybe get out of the way a little bit while Kamala Harris has her moment and takes this DNC home.
Certainly, we've seen party support coalesce around Kamala. They are forging ahead in terms of national polls, in terms of fundraising. What's your sense of whether they can keep the momentum going all the way until November?
Well, it's up to the party. It's up to everybody who gets the vote out, essentially. And it's up to those independent and persuadable voters who might be tuning in to tonight or any of the nights of this week to just see, what exactly is going on with the Democratic Party, because there has been a tone shift. There has been a fascinating shift in support.
Vonnie, I just want to interrupt you there if I can. Yeah. We do have Joe Biden just arriving on stage now, embracing his daughter Ashley there. As you mentioned, we can probably anticipate a few minutes of standing ovation before the president starts to speak. So warm embrace there between Joe Biden and his daughter as we await his words to the Democratic National Convention.
Thank you. Thank you. Thank you, thank you, thank you. Thank you, thank you, thank you. Thank you. Thank you. Thank you. I love you. Thank you. Thank you, thank you, thank you. That was my daughter. Thank you. Thank you, thank you, thank you. Thank you. Thank you for so. I tell you what. To my dearest daughter, Ashley, God love you, you're incredible. Thanks for the introduction and for being my courageous heart, along with Hunter and our entire family, and especially our rock, Jill. Who, as those of you who know us, she still leaves me both breathless and speechless. Everybody knows her. I love her more than she loves me. She walks down the stairs and I still get that going boom, boom, boom. You all will know me. No, I'm kidding. Let's give a special round of applause to our First Lady, Jill Biden. My dad used to have an expression, for real. He'd say, Joey, family is the beginning, the middle, and the end. And I love you all. Folks. And America, I love you. Folks, let me ask you. Let me ask you. Are you ready to vote for freedom? Are you ready to vote for democracy and for America? Let me ask you, are you ready to elect Kamala Harris and Tim Walz, President and Vice President of the United States? My fellow Democrats, my fellow Americans, nearly 4 years ago, in winter, on the steps of the Capitol, on a cold January day, I raised my right hand and I swore an oath to you and to God to preserve, protect, and defend the Constitution and to faithfully execute the office of the President of the United States. In front of me was a city surrounded by the National Guard. Behind me, a Capitol just 2 weeks before had been overrun by a violent mob. But I knew then from the bottom of my heart that I knew now there is no place in America for political violence. None. You cannot say you love your country only when you win. In that moment, I wasn't looking to the past. I was looking to the future. I spoke of the work at hand, the moment we had to meet. It was, as I told you then, a winter of peril and possibility. Of peril and possibility. We're in the grip of a once-in-a-century pandemic, historic joblessness, a call for racial justice long overdue, clear and present threats to our very democracy. Thank you. And yet I believed then, and I believe now, that progress was and is possible. Justice is achievable. And our best days are not behind us, they're before us. Now it's summer. The winter has passed. And with a grateful heart, I stand before you now on this August night to report that democracy has prevailed. Democracy has delivered. And now democracy must be preserved. You've heard me say it before. We're facing an inflection point. One of those rare moments in history when the decisions we make now will determine the fate of our nation and the world for decades to come. That's not hyperbole, I mean it literally. We're in a battle for the very soul of America. I ran for president in 2020 because of what I saw in Charlottesville in August of 2017. Extremists coming out of the woods, carrying torches, their veins bulging from their necks, carrying Nazi swastikas, and chanting the same exact anti-Semitic bile that was heard in Germany in the early 30s. Neo-Nazis, white supremacists, and the Ku Klux Klan, so emboldened by a president then in the White House that they saw as an ally. They didn't even bother to wear their hoods. Hate was on the march in America. Old ghosts and new garments, stirring up the oldest divisions, stoking the oldest fears, giving oxygen to the oldest forces that they long sought to tear apart America. In the process, a young woman was killed. When I contacted her mother, I asked about what happened. She told me. When the president was asked what he thought had happened, Donald Trump said, and I quote, "There are very fine people on both sides. My God." That's what he said. That is what he said and what he meant. That's when I realized, had to listen to the admonition of my dead son, I could not stay in the sidelines. So I ran. Because I had no intention of running again. I just lost part of my soul. But I ran with a deep conviction. In America, I know and believe in an America where honesty, dignity, decency still matter. An America where everyone has a fair shot and hate has no safe harbor. In America, where the fundamental creed of this nation, that all of us are created equal, is still very much alive, and a broad coalition of Americans joined with me. 81 million voters voted for us, more than any time in all of history. Because of all of you in this room and others, we came together in 2020 to save democracy. As your president, I've been determined to keep America moving forward, not going back, to stand against hate and violence in all its forms, to be a nation where we not only live with but thrive on diversity, demonizing no one, leaving no one behind, and becoming a nation that we profess to be. I also ran to rebuild the backbone of America, the middle class. I made a commitment to you that I be a president for all Americans, whether you voted for me or not. We have done that. Studies show the major bills we have passed actually delivered more to red states than blue, because the job of the president is to deliver to all of America. And because of you, and I'm not exaggerating, because of you, we've had one of the most extraordinary 4 years of progress ever, period. When I say we, I mean Kamala and me. Just think about it. COVID no longer controls our lives. We've gone from economic crisis to the strongest economy in the entire world. Record 60 million new jobs. Record small business growth. Record high stock market. Record high 401ks. Wages up and inflation down, way down, and continuing to go down. The smallest racial wealth gap in 20 years. And yes, we both know we have more to do, but we're moving in the right direction. More Americans have peace of mind that comes from having health insurance. More Americans have health insurance today than ever before in American history. And after, as a young senator beginning to fight for 50 years to give Medicare the power to negotiate lower prescription drug prices, we finally beat Big Pharma. And guess who cast the tie-breaking vote? Vice President, soon-to-be President Kamala Harris. And now it's the law of the land. Instead of paying $400 a month for insulin, seniors with diabetes will pay $35 a month. The law we passed already includes, starting in January, every senior's total prescription cost can be capped at $2,000 no matter how expensive the drugs they have. And what we don't focus on, and our Republican friends don't seem to understand, our reforms don't just save seniors money, they save the American taxpayers money. You know what we just passed saves? It saved $160 billion over the next decade. That's not hyperbole. It's because Medicare no longer has to pay those exorbitant prices to the Big Pharma. But look, well, thank you, Kamala, too. can we have the strongest economy in the world without the best infrastructure in the world? Donald Trump promised Infrastructure Week every week for 4 years, and he never built a damn thing. But now, because of Kamala, I've done. Remember, we were told we couldn't get it done. Remember when we came into office, we couldn't get anything passed? But right now, we're giving America an infrastructure decade, not week. We're modernizing our roads, our bridges, our ports, our airports, our trains, our buses. We're removing every lead pipe from schools and homes so every child can drink clean water. We're providing affordable high-speed internet for every American, no matter where they live, not unlike what Roosevelt did with electricity. And so much more. We are uniting the country. We're growing our economy. We're improving our quality of life. And we're building a better America. Because that's who we are. How can we be the strongest nation in the world without leading the world in science and technology? After years.
President Biden there addressing a rapturous Democratic National Convention in Chicago. They're getting a huge ovation when he came out. A chance of thank you, Joe. We love you, Joe. Now recapping the achievements of his 4 years as president. Also talking about an America in which honesty, dignity and decency still matter. We'll leave the president there. Let's get back to what's happening in the markets. Markets in India have just opened, currently looking like this. We do have a modestly risk-on tone across the region more broadly, and India at the open reflecting that. Got the Sensex better by about 0.25% at the moment. Nifty Banks indexed better by about 0.2%. We've got the rupee though still looking pretty weak, just around about just below the 84 cents US level. Elsewhere around the region we are seeing pretty much a risk-on tone. The Nikkei, the best performing market right now, better by 2.2%. The yen whipsawing around the range between 146, just below 147. We've seen a lot of movement in the currency over the past 24, 36 hours as the questions remain on whether the carry trade still has enough room to unwind. We are counting down also to Jackson Hole at the end of the week. Coming up, we're discussing the opportunities and challenges in India's rapidly growing startup ecosystem. The CIO of VC firm 314 Capital joining us exclusively next. This is Bloomberg. India's startup ecosystem has grown into what officials describe as the world's third largest, despite global economic regulatory challenges. According to a report by NASSCOM and Zinnov, Indian tech startups have attracted more than $70 billion in cumulative funding from 2019 to 2023. Pranav Pai is founding partner and CIO of 314 Capital, joining us now to look at some of the trends in the startup landscape. Pranav, thanks so much for being with us today. Just wondering what broader changes that you're seeing in India that is helping the environment for tech startups right now.
Thank you, Paul. Great to be here. I think it's a really interesting time to be an Indian investor. A lot of the opportunities that we used to invest in even a decade back are now in heavy demand by the IPO markets. We have a really open, welcoming IPO scenario in India. They're waiting for new assets that we're building. They're welcoming tech-led businesses like the recent IPOs you heard from the market. So it's a really interesting time to be a private investor in India. And of course, seeing our companies go IPO across sectors, across business models, building and solving for India's problems first. It's never happened before at this rate. So that makes for an interesting opportunity.
So can you describe for us the state of India's AI startup ecosystem at the moment? Because it is obviously lagging behind US and China.
It is. We haven't invested as much as the US and China have in fundamental research. So LLMs, fundamental algorithms, cloud compute, and so on. Obviously, the US and China leading the whole of the rest of the world. But what we have as an interesting advantage is our tech talent pool. As you know, India's tech talent is fairly distributed globally. We have amongst the deepest tech talent pools in the world. There's almost 6 million IT engineers in India, building for the best companies globally, from NVIDIA and Apple to Qualcomm and Intel. So I think what you're going to see over the next 5 years is a catch-up investment in India. We're going to be building a lot of our own cloud infrastructure. We're going to be importing the world's best chips. We're also going to be designing the next generation of chips with the Indian talent pool that we have. Just in my city of Bangalore, we have almost 300,000 chip designers and verification engineers. That's the largest concentration of chip designers anywhere in the world. So the Indian talent pool will contribute, but of course, we're lagging behind on investment. And what you'll see from the startup ecosystem where I invest, you see a lot of us investing in applications built on top of open source LLMs, built on top of open source algorithms. You'll see us productizing those LLMs for different products and scenarios much faster than most of the rest of the world. So this catch-up, I think, is pretty serious. I definitely think India doesn't want to be left behind. There's a lot of venture capital concentrated on India now, not only local capital, but global as well. So I expect the Indian catch-up will happen pretty rapidly over the next 2 to 3 years.
Yeah, so you mentioned the talent pool is there. Certainly the enthusiasm sounds like it's there. But to your point, where is the money going to come from? Where's the investment coming from? I think we've had $1.1 billion commitment from the government so far. Do you anticipate more from there? And what sort of money are you putting into this space?
For sure. I think India's always lagged behind in terms of its own rupee contribution to its tech companies. Out of the 70 or 80 billion that India has raised over the last 15 years, less than 10% has come from India itself. Most of that is global capital. So I think what we need to do, what we need to invest in as an economy, is we need to bring more local capital into our tech innovation ecosystem. And I think AI maybe is the perfect call for action from that perspective. So local VC firms like us, we're having our LPs, both local and global, encouraging us to take more longer-term, more longer horizon bets, like AI, for example. We're also investing in manufacturing automation, robotics, imaging, and of course, newer forms of chip design, like I mentioned before. So you're seeing now local capital becoming more interested in longer horizon bets. And of course, the IPO markets being healthy, taking our best assets public, giving us an ability to return capital and recycle it. I think all of that has meant we have more confidence in rupee capital to invest in rupee innovation. So I think that's something that's changed in the last 3 years. I think that's a good sign for what's to come.
Yeah, a lot of exuberance in the space, as you would expect with an exciting new technology like this. But to what degree do you need to really step back, take a close look at profitability, and in your case, a close look at cash burn as well?
Of course, I think 2022 was a call to action for global tech in terms of reducing cash burn. What you've seen in India is a few things that were quite interesting advantages. For one, Indian entrepreneurs have always built with a frugality in mind. We don't take capital for granted. Venture capital as a phenomenon is a pretty new experience for most Indian entrepreneurs. The best and large Indian companies, the Infosys, the HDFCs, the large caps in Indian public markets today, if you look back at their economic history, they built with really frugal availability of equity, right? So I think the frugality in Indian entrepreneurship is something that's in the DNA. When cash becomes difficult to access, we battle down the hatches, we make sure we turn profitable faster. And of course, since we're now building for the IPO markets with a little bit more discipline, you're seeing a lot of our largest startups becoming profitable faster. They don't want to enter the IPO scenario burning cash. So a lot of the recent IPOs, you'd see them be profitable when they actually listed. So I think that means good news and a good signal for us in the early stage. A lot more of our companies, Series B, C, and D, which is fairly early in the capital chain, they're turning profitable. We have close to a dozen companies out of the 80 companies that we have active already profitable on EBITDA terms. So it's an interesting experience. I don't expect it's sustainable for all startups to turn profitable that quickly, but certainly the bigger ones, the better ones, will show that capability much faster than was typical before.
All right, Pranav Pai, founding partner and CIO of 314 Capital. Thanks so much for joining us today. Just before we leave you, let's take a look at what's moving around markets in Asia at the moment. We've got a pretty good performance happening in Mongolia. The exchange there today better by 1.3%, but the Nikkei in Japan powering ahead, better by more than 2% right now. And the yen having another interesting ride today, weakening past the 147 level. The yen trading right now 147.16. Indeed, it's emerging markets Forex that's doing well also. The Vietnam dong, Taiwan dollar, Indonesian rupiah, all among the top performers. We are, of course, waiting on a rates decision from Indonesia later this week as well. That is it from Bloomberg Markets Asia. Horizons Middle East and Africa up next.